Let's discuss actually how to sell digital factoring products in a digital way, right? So I will start from the question to all of you. Could you please share with us what is the structure of your customer acquisition right now? What comes from the digital channels and what comes from relationship managers? If you have brokers, partners, yeah, please, Anna.
So last year at PropGo, we had nearly 2,000 active factoring clients from 4 main channels, which are brokers, partners, our website, and sales team. And across all those channels, we had 50% of fully digital clients and 50% of those who came with mixed path with some help of the traditional methods. But what's important, last year, 82% of new factoring clients are fully digital ones.
Yeah, good results. Tomasz.
At Monevia, we have the same four main channels of acquisition of clients. The first is, of course, each of them divided into many sub-channels and activities. The first is digital marketing, like key search, optimization, Google Ads campaign, etc. The second, this channel is most valuable for us. Brings huge many leads for us, good leads. The second is brokers. We are preferable brokers with business-related website with ranking of products, financial product, comparison. The third is own activities of our sales team, supported by a loyalty program. And the fourth is cooperation and partnership with institution where many potential clients to interested in our services, like bank.
Okay.
I have.
Marek?
In our case, I think it's changing on the beginning when I was not in the company already, but mostly clients came from the marketing, digital marketing. And now we're building the partnerships, so we see this growing. Up to 50% is our ambition plan to have this level. I saw this, that's also offline marketing is working, in our case, conferences. While we are quite strong in the transportation industry, so we have a roadmap to be on the conferences, transport logistic. We have stand there and I have presentation, and we see that a lot of interactions coming, especially if they understand better what factoring is. Yes, what is different than Skonto, which is quite popular on this segment. That's why I think this possibility to explain more deeply on the conference is important one.
Okay. Martins?
Hello. So last year we have had more than 200-300 customers approximately all over the group, so Baltics and Poland. And actually every country is really different in acquisition, right? So in Poland, for us, it's mostly like partners, brokers, partners. We have tried some cold calling or something, but it has been really, really bad in terms of conversion, like 1% or something, while other channels like 6-7%. While in Baltic markets, actually it's vice versa. Partners is like nearly zero, not only for us, but for other competitors. And cold calls, for example, are working quite well, like 5-10% conversion rate. Digital, I will talk about that later. I have some thoughts about that, but that's a tricky one. If you talk about like digital, I think ads and stuff like that.
All right. Let's start with the partnership channels, because actually the presentation was about that. And I will ask Tomasz you first, and then Marek. We all know the latest news about your cooperation with here in Poland with BNP Paribas Factoring, with your micro factoring product. So yeah, tell us more about that.
Thank you. At the beginning, I would like to say that mention that the cooperation with BNP Paribas grew because our partner is both BNP Paribas factoring company and sub-partner BNP Paribas Bank. The cooperation is not based on digital solution, digital integration. It's more of recommendation program supported by IT solution. This is due to many reasons. First, the main ones is cost of integration. And the second is for both sides, of course. And the second is security of access to bank online system. It's very hard, in my opinion. So the process is going as follows. The factoring needs of clients is identified by branch advisors, bank advisors in the branch. He sent short notes to specialist, BNP Paribas factoring specialist, and the specialist contact with potential clients, and check, verify the real needs and possibilities for factoring. When client meet the criteria of classic factoring, he remain in BNP Paribas factoring. For me, it's end of process. If clients doesn't meet the criteria, like turnover below 1 million euro, less than 90 months of experience on the market, lack of full accounting, no regular contractors, etc. He sent to clients recommendation of Monavia services. He sent also short application form, electronic application form, with consent to proceed in Monavia. The client fill out the application with basic data, contact data, and this application loaded into our CRM, sales CRM. Next comes standard contact with our sales team, independent onboarding on our transaction platform, granted limit. Of course, we do not need any financial statements and other documents except invoice. When client can carry on transaction uploading an invoice. Of course, we have a special value proposition for customer from BNP. This is those are first is just a moment.
Lower fee or lower interest rate?
2 times higher limit, factoring limit.
Okay.
At the start, the client got 100,000 Polish zlotys instead of 50,000 zlotys in the standard. The second is lower and fixed price for transaction. So the cooperation has been going for a month. In this time, we acquire about 200 business leads. About 40% of them converted into client with transaction. We financed about 600 single invoices and achieve turnover about 1.5 million
What are
euro.
your expectations? Do you expect more? Is it
Yes,
good
of
or
course,
bad?
we are still hungry of new leads from this source. I think there was two reasons why bank want to cooperate with partner in digital factoring. The first was the factoring company BNP Paribas Factoring hasn't offer and process for smallest customer. But in the bank has those type of clients, and the offer could be complete. This is first reason. The second, related to the first, is a retention. Bank cannot afford for their clients to look for other financial solution outside the bank and take a risk to leave the client with turnover from bank. This is in my opinion.
Okay. So the reason was not the revenue stream for them, but rather retention, right?
I think so.
For the bank.
I'm sure.
All right. Marek, coming back to your presentation and the line that you said about the integrations with the banks, and Tomasz, also what you mentioned that here the integration was not possible because of the cost and probably time. We know these challenges, right? We know that these challenges in cooperation, but from the customer perspective, I think it will be ideal if it would be integrated, right? Because this is an easy process, quicker process, less frictions, less manual job, which of course leads to the better everything, better leads, better number of customers. Do you think these challenges could be overcome in some way? Because we know all of them. From the customer perspective, we want this to be. From your perspective, I think you always also prefer,
Very good question. I think this is my role, this is our role as a fintech to come to the bank and discuss very openly from the beginning. So even if they say on the beginning, listen, we don't have resources for this year or next quarter, let's start from the very basic, we'll provide the leads. Okay, but let's agree some KPIs for this. What the success factor is for you? What does it mean? How many clients, etc. you want to achieve to say, yes, this is success. And what is the next step? Because I think as a fintech, if that will be for longer, for the end of the life, that doesn't make sense simply. So let's agree some test. And based on this success factors, we can go for the integration. Maybe not now, but maybe 6 months later. I can give you maybe two examples, positive and negative, from my previous business life. One was Peko, I think 10 years ago. They opened the service for the exporters and invite the external supplier. And I was invited as a provider of B2B database. And my colleagues from COFAS was invited to provide the financial report and scoring. And in some moment I ask, okay, what is the plan? What you want to do with this? Do you want to plan of communication? Is it some extra offer, easier pricing, etc.? And they don't have a plan, actually. They cannot promise anything for the promotion, and pricing will be similar what is on the market. So I said, so I don't believe, and resign. And my colleagues join, build the API, invest the time from the COFAs, and imagine how many clients they get from this. 0. Why is that? Because simply exporters will not go for the bank to find the, I don't know, reports, databases. They could go if that will be part of the service, and they see this automatically when they log in. But that was quite separate service out of the main PKO BP web page. Yeah, so that was unsuccessful. Another from my mobile telecom market, I was working 10 years, and it was insurance for the phone and laptops. On the beginning, that was not so popular, but the margin we get was amazing. Yeah, so that was great product. So one day board said, listen, we need to go for the target for the salespeople, not only selling SIM card, but let's make some quality target to sell this insurance for the phone. And that started. This was like
Yeah. So not the
hundreds of time
is such important as common target
internal target for the sales is important.
Martins, what's your experience on partnerships?
I'm thinking now, listening and thinking, actually, do banks really need it? Oh, what's the point for them? Yeah, retention, la la la. But do they really need it? Isn't it just a hype? Because no, they have survived without that, and fintech will not take a bank customer. They will not do payments or loans or salaries or whatever. So I think it's just a bit of a hype. I think it's a good example. I hope Monavia will be, and BNB will be a great partnership. But I think that if you think about fintechs and these issues that fintechs, or positive things that fintechs have, like this digital, online, ready to integrate APIs, etc., then I think the ideal partner is similar. And so, for example, last year we also had an awesome experience when we integrated with a platform. It was a logistics platform out of Germany, and that was really a really great experience because they were so fast that even we thought we are fast, they were 2 times faster in integration, and in like a couple of months we did a full integration where actually customers on their platform could just press a button, finance, and everything is calculated already. They already see a number, like commission rate, everything. They just, when they press finance, actually next step, they get money into the bank account. That's it. So I think that maybe, I'm just provocatively asking, isn't it overrated to think that a non-digital bank should integrate with a digital player, especially, as colleagues said, yeah, if they don't have real targets or clear mindset, sales targets, top management, maybe willingness, etc. And when you think about revenue and commissions, no, you didn't speak about your funds, etc., but no turnover you mentioned. But I assume from 1.5 million zloty turnover, you can do commissions like what, 15,000 zloty? So which bank cares about that? Yeah, in Baltics last year, I think in Lithuania, banks earned 900 million euros per year. And so what would be the amount they actually need to get from a partnership so that they actually start to care about it? And do they actually care about these small customers and businesses? Because my experience, maybe it's different in Poland, but the Baltic experience, for the Scandinavian banks, for example, like Swedbank, SEB, etc., it's easier to close down an account of a small and medium company rather to do AML checks on it. So I think that it's a bit provocatively, I'm asking, is this maybe this is an overrated hype, and maybe actually it's, you know, when an elephant is dying, maybe he's just trying to get to catch something, but in reality, it's a maybe non-digital bank fight versus digital banks, and we are just in the middle of it.
So you're saying they just don't see it as a business model. They don't see that this could be a new revenue stream for them or enough revenue stream.
I think it's
for
really
them
personal,
to invest resources.
But I don't see that on majority. I don't see it makes sense on majority.
All right, let's get back to the direct customer acquisition and how to do this, because I think this would be the ideal, right? Situation when customers are coming to a website or to a platform directly, and and you can finance them from your platform with all your products. So Anna, first I will ask you first on that, because this is your daily job as a head of marketing.
Yeah.
Please share with us here, how do you attract digitally and which digital tools work for you?
Thanks for this question. That's true. It's perfect for a marketing director. So first of all, I would like to recall our report we ordered 1 year ago. And it shows that factoring clients like factoring because it enables them to run their business by their own. It makes them feel stronger, self-sufficient, self-confident, and they don't want to be seen as weak, and they hate metaphors like emergency service. So it was after this report, we decided to emphasize our archetype as a wise companion. And for example, we run a business blog for entrepreneurs. And last year, it attracted 500,000 readers. So those numbers speak to the strength of our brand, of our website, but unfortunately doesn't reflect the number of leads from our website. So here's the second thing. There is the B2B marketing theory, which is modern theory, and is very relevant in terms of factoring and B2B marketing in financial sector, which calls 95-5. And it tells that 95% of B2B clients are out market, so they are not interested in doing anything at the moment. And only 5% of prospects are really in market. So the real role of digital marketer is to build the awareness of your brand. So when they eventually will be in market, your brand, PragmaGo and Monevia brand, can come to the mind at first. So the question is how to build this awareness of your brand. And we, as I said, run a business blog. We also make some webinars. We write some ebooks. But we also run 5 different social media profiles. And we also spend some money on Google Ads. And here's the third thing I would like to share with you, because since January 24, we've been using new AI tool from Google Ads, which calls Google Offline Tracking. And it can really change a lot. So this tool learns the offline path of the converted leads from the Google. So then Google Ads are able to look for similar leads, making this searching on Google. So Google Ads knows thanks to be feeding, what types of leads eventually really were converted into ongoing contracts, ongoing agreements. I think that was the most important.
All right.
Thanks.
Martins, would you share with us your experience?
I'll talk about something else. Positive experience. Good. We have similar positive experience.
Tell us the negative one.
Negative one. I think that's where you can learn more, or at least laugh a bit. So we did a campaign on Facebook because on one hand you think like small business, it's one or two maybe main guys, main people. So they use Facebook anyway, so you can kind of try to get that. And we started the campaign on Facebook. It was actually also with educational material, with success stories, like right away, like, hey, it's possible to get your funding fast, and exact examples, proofs, like really, like some USA type of marketing. And in the initial stage, you actually got a lot of people who had no relations to companies. So we thought, okay, let's try something harder, more hardcore. We agreed with Facebook that we can collect a NIP number. It was actually a struggle because it's kind of not allowed in the beginning, but we made through it. We got the NIP numbers. So I think over the period of some 3 months, 2-3 months, we got, with small budgets, we were testing, we got some 400 leads with NIP numbers, so kind of like ready to go. But reality is that it was random companies. Similarly, as a colleague was saying, like 95% are out of market. So yes, they signed up. They even gave their contacts. They gave their company detail, like NIP number. You could identify the company. But in reality, they were not really willing to have funding even at that stage. And out of this campaign, as I mentioned, some 400 leads, we got actually one active customer. And the funny thing is that the active customer joined on the first day of the campaign. So like one of the first hits on Facebook was really good, but everything else was garbage. So I think when we talk about like ads and social ads, I would tend really to agree with colleague. I think that for small business, it's quite hard to manually to get the part of the market and to kind of characterize the company, right? To get the actually like the best lead. And maybe this like AI approach for Google and some new other things on like stalking people kind of things from Google are more effective in that, because you cannot really like deal with that with small companies. With big companies, it's quite easy, right? You can get on LinkedIn and get some like good segmentation and get some good things going. But with small companies, this is really tricky. So I really adore what Pragmago does. This is blog and ebooks. I think this is kind of it's a good way to do PR rather than try to hope that your ads will give a result to you next day. It will not happen.
Yeah. Are there any questions from the room to the panelists? Do you want to ask something? Yes, Christian, can we have a microphone, please?
I have a question for Pragmago and Monevia. As far as we know, Pragma acquired Monevia this year or last year, I don't remember. But what is the intention to do? Will you intend to combine the brands? Will you operate like two separate brands? What is your strategy for this market? Will you target different market segments with two different brands? That's the question. If you have an answer, of course.
We don't plan to make one company from the two assets. I don't know what I want to say in this area. We are still making own business. We try to attract our products to smallest company on the market, but Pragma targets own offer to higher companies.
Yes, summarizing, together we are stronger, and Monevia is focusing on smallest micro clients, and at Pragmago we has raised limits up to 15 million this year, so we are looking for bigger targets.
Okay. Yes, Katalin. Just a second.
How much potential do you see in embedded finance, or do you see any potential in it?
What kind of embedded finance?
It's like
invoice finance.
Invoice finance. So when you integrate with others, so you sell through other players.
Because you have some good or bad example.
Yes.
Experience.
So I can present you a case study. We have 6 different integrations with e-invoicing platforms, and unfortunately not even single one of them is fully embedded. And the story is similar to others. What's crucial is the engagement of your partner. So in every of those integration, customer has to enable our plugin to see our service. Then after choosing invoices for finance, we take him to our customer panel when the scoring and financing processes proceed. So it's not an example of user experience gem, but with such legal, technical, financial constraints and limits of the partner's engagement and time and money, we made the most possible.
Mm-hmm. This is this is what we discussed some times ago. That's when we have this cooperation or partnership with independent e-invoicing platform or accounting platform and independent factoring company. Then this cooperation, due to reasons actually discussed right now in the panel, are not so successful as all or especially factoring companies are expect to be, right? And when we see the embedded invoice finance, which is integrated within the, let's say, banking groups, when they have banking, we have e-invoicing platform and factoring company in one group, then it works better. Because then probably these business targets are in line and the integration is smoother or easier, and then it works better. Yeah.
I think embedded finance is and should be a big thing, but I think unless those partners will feel that it's to their value, for example, when you talk about e-invoicing platforms, apparently, and I have some other areas similar experience, is that while these platforms don't believe that they compete with each other based on ability to provide finance, they see it as a cost and like, why would we need to do it, right? Like I discussed this on transportation platforms that has a huge amount of trucks and truckloads and like possibility to finance. And they say, but we don't need it. We take recurring monthly revenue on our SaaS kind of type of approach, so huge that we don't really care about minor commission or whatever on the invoicing, on the factoring. While there have been other examples, like other similar platforms, that don't even talk about like revenue sharing or whatever. They just say, wow, it's awesome. We want to do it because we will beat our competition and we will grow our core market. So I think unless this area, e-invoicing or whatever else area, will feel competition in between, that they actually have to start to compete hardcore, they will not grow extra services around their core service. But when they will do, that will be a really big thing.
All right, to wrap up the panel, very shortly, I would ask you the same question as I asked my previous panel. What is your ideal factoring or invoice finance process? Who will start? Anna.
So ideal factoring would be at hand, and mobile factoring would be primary for all digital factoring applications and methods. And I would love to see everything in one application with invoicing platforms. I mean, those applications would have invoicing platforms in itself with the financing possibilities, with
End of time.
with the forecasting of my cash flow and my recipient's cash flow. I open the wish list.
Yeah.
Let's go crazy. I think the ideal factoring use case is that there is no factoring. Because I think at the end of the day, company doesn't care if they use leasing or factoring or loan or credit line or overdraft or mortgage or whatever. They care about what's the product? Cash.
Yeah,
So
money.
why would they care about factoring? Why would you care where it is born or whatever? You need money, right? The same way when you do anything else like water, you just need water, right? You don't think about this magic, where will you get it, like there or here. You need to drink, right? That's the same. I think factoring will just go a bit away, and I think the next wave, factoring wave is, I think, over in 3 to 5 years. And I think it will be just money wave, cash wave,
Yeah,
with
just
all
countries,
AI,
yeah.
everything. It will be cash wave.
All right, Marek, Tomashenin.
I
last
would
thoughts,
say
yeah?
right time, right place, and right customer.
Yep.
I mean, right time is the moment when they see on the invoice 60 days, so they need some finance. Right place, it could be place where is ERP system or just anywhere where the invoice is presented. And right customer for us, low risk. I mean, this perspective customer, because we
Ideal
don't
customer,
simply
yeah.
want to have any customer. We want to have good customer, fat one. Yeah.
All right.
Thank you.
Yeah, all right. Thank you very much. Thank you for my panel, Anna, Tomasz, Marek, and Martins. Thank you very much.
Thank you very much.